The first stage of a Bitcoin bull market cycle is one of the most difficult stages to invest in. So if you are still here in the markets now, well done, pat on your back. There is a lot of confusion out there in the market. A lot of mistakes are being made at this time in the market because it's one of the most difficult. It's one of the most confusing times to be in. If you've been under a rock, I'll bring you up to speed. Basically, many believe that this is a bear market rally. That's why many are still waiting on lower and lower prices. But in the short term, Bitcoin has wiped out the losses of the last couple of days, even the most fearful time that we had on the 14th of June, breaking support levels, only to see all of those losses reversed and more gains being put into the market. We've even touched and broken past the swing top. So how can we avoid the fundamental flaws of the investor at these worst times in the market, the mistakes that they make at the bottom? Let's have a look at that in today's video, covering BTC. We've got the dominance to get through. We have some of the major FUD items like USDT and USDC Depeg, and of course covering the traditional markets of the S&P, the NASDAQ, and some of those markets which are in new all-time highs, yet their economies are in recession. Just pay particular attention to that moving forward. All right, guys, you know what to do. Hit the like and subscribe. Plenty of receipts here on the channel if you want to go back and check them all out. I'll leave a link to this in the video description, looking at how we got to this point in the market. All of my calls are updated right here, what I've been talking about over the last 12 months across the stock market, real estate, Bitcoin, crypto, you name it. These are my calls. This is the update right here. So go and check that out after this video as well. And if you want to learn how to trade like our members are doing right now in a bear market, in a bull market, making profits from cryptocurrency trading, link is in the top of the video description. Subscribe to our free email, our free crypto and economic report, and you'll go on the list for the next free trading workshop. So congratulations to you guys. These are the updates from the last time I showed you their results. All right, so the first piece of FUD news, the mistakes that basically happen at the lows of the market. Not every single time, but typically at those lows. We get a lot of fear flow into the markets, and then we have some bulls or bears, depending on which way the market's moving. In this case, we were going down. The bulls start to flip. They start to get a little bit worried about their position, and they'll capitulate. And so we saw that just a couple of days ago when we got that low come into the market on the 14th. And now we're seeing the market reverse and take back all of those gains. One of the pieces of FUD that has come out in the last couple of days is the Depeg of USDT and USDC. Basically, the stable coins in cryptocurrency not holding their peg, their one-to-one peg with the US dollar. And the latest one was USDT. Depending on how long you've been around in cryptocurrency, you may have seen this once or twice, 3 times, maybe even 10 times already, with some sort of FUD piece on USDT. So if you are new to the market, make yourself familiar with all of the FUD pieces that continue to come out, and it removes the emotion from the whole mess of the news. The drop was 0.08 by the end of the day. So that was the Depeg at the end of it, and now we're almost back to parity. It's less than 0.1% difference. That is what everyone was worried about. If we go back to March of 2023, so this was the banking crisis collapse, USDC actually depegged by 20%. You can see there was a huge difference here to $1.20 to $1. That was USDC losing about 20% down to about 80 cents at that time. And it came all the way back, which was a pretty reasonable trade at the time, but you just never know what will happen at that point. So this is what people were freaking out about. This is one of the extremes that has happened in the past. And we have seen other pretty significant extremes like what happened at the cycle low of November 2022. These things happened often. So far, everything has remained intact. But if you just want to take a look at the magnitude of some of these moves, these ones you don't want to be worried about, I think, of course. You take it for what you will. These ones, maybe you've got some cause for concern because they don't happen that often. You've got 3 of them in the last couple of years that are that significant, but the rest of these are just absolute nothing burgers, pretty much like everything else we hear in the news headlines. Yes, that goes for even recessionary calls, which I'll get to in a minute. So that's the first major mistake that we're seeing at the moment. People sort of getting washed up with the FUD and maybe dropping their positions, or worse, waiting and waiting and waiting. Market's going to go lower, waiting on the pullback, waiting till things settle down, waiting on the pullback again because they think the market's too high, market's too high, market's too high. So it never seems like a good time to buy, especially at the beginning of the market. But the risk is the lowest when the market is near its low, like for BTC. I'm calling it between 15K and roughly 25K. That's where the risk has been the absolute lowest if you believe there is a lot further upside. If you only think the market's going to go to 30 grand, then the whole thing is high risk. You don't want to be betting your money for such a small move to the upside. But nonetheless, if you think Bitcoin's going to 50 grand, 100 grand, 200 grand, then buying between 15 and 25K has been a no-brainer. But of course, this is the psychology of the market. Market's going lower. We saw that just 2 days ago, and now all of those comments are basically off the board. Some people may still believe it. They think Bitcoin's going to 19,000, 20,000. They think it's going to 15K, 10K, 3K. It's all noise. It's all garbage. Obviously, my opinion based on the analysis I've been doing here for many, many years. So take it for what you will. Go do your own research as well. Make it as confident as I am about it. Make it confident for yourself, because that's the only way you're going to be able to stick with your positions through any sort of market movements. That is another huge mistake. Market is going lower, and we've seen that reversal. Some of the other key points, some of the other headlines and the narratives that have been shifting, and some of the things that we are now seeing in these markets are things like newsletter writers are turning quite a bit more bullish. So this would go for news headlines, obviously newsletter writers, as the article mentions here. Also, you're seeing a lot more people, at least in the stock market, talk about the market hitting to new highs, and they're feeling a little bit more confident in the market. But of course, we've been covering this since the low, as I pointed out in the video yesterday, with receipts mentioning exactly where I talked about that on the channel and on Twitter, talking about the low. And it's always going to be the opposite to what the masses want to hear. They don't want to hear the market is bottoming because they think it's going to collapse even further. We've also going to have a look at the VIX gauge, the feared gauge. It's fallen to a new low, which is a good thing for a bull market. So basically, that's the main thing I wanted to have a look at here. More indicators are tilting to the bullish side of the ledger, and of course that makes it easier to write about the bullish piece. But when you start to push to fresh highs, it's not a safe thing to be buying when everyone else feels comfortable and safer in the market. So that's what I've just been talking about here. 24 hours later, it's a 2% recovery. That was yesterday, and the bears disappeared. The day before, which was this here, takes a 3% drop for the bears, for the comments to start flooding in again. The market was up 60% from the low. It's now up 70% from the low. I'm just here to remind people of the structure of the market when we look at it from a macro perspective. And of course, if you want to trade like these guys, you know where my shield link is. Link in the top of the video description there. And unfortunately for some, they dedicate their whole channels. This is from a comment, not having to go at anyone here. Their whole channels to a narrative. I wonder how they'll manage if they end up being wrong. Now, I don't want to go along the path of wrong and right. It's up to your own analysis, and it's a very, very difficult thing to try and forecast the market, as you've seen here on the channel. Fortunately, we've been on the right side for many of these different markets, and to cover so many of them, that's another big game that we play here in the Investor Accelerator. That's obviously what this group is about, our membership. Yeah, what I think happens from that point is the bearish narrative begins to pivot, and what happens is, pay very, very close attention to this, I've already started seeing it, is any of these indicators that the bears have been using, what they say is they're broken. The indicators are now broken, okay? It's not that they're broken, it's just they didn't know how to read them in the first place. So that is one big thing I've seen come up with each of the cycles, whether it's a Bitcoin cycle, whether it's a stock market cycle, whatever indicators they're using that have now not worked to prove their point, they say the indicator is broken, rather than going back to the drawing board and having a look at how they were wrong. That's personally what I prefer to do, because then I can learn from my mistakes rather than just ignoring the part that I was wrong and saying something else is broken, let's move on to the next thing. So that's the other piece to that. Most people forget about what's happened in the past and they'll just follow the fundamentals anyway. So the second piece is, well, if you're following the news, then you're always going to be right, because there's a lot of bad stuff that is in the economy. There's a lot of crazy things that are going on, which logically the market should collapse. The market is not in a, well, the economy is not in a healthy position for the stock market to be going up. These are two separate things, the economy and the market. The market is going up. So they're the two things that will happen. The bears will start to say these indicators are broken. And then the next thing is most people forget anyway, and the fundamentals look like logically thinking things should collapse. Like we've talked about, eventually they will collapse, but now's not the time. Now's the time to be making money before the collapse, because there will be a collapse and we need some more cash to buy up at those lows. So this is another good thing that I like to see. You don't flip views on every market wiggle. Let it come to you. Have a good weekend. So yeah, that's what I saw over the last couple of days. Major bull accounts capitulating, another mistake, pretty much at those low prices. But yeah, I mean, I'm not here to say that you're right or wrong. At the end of the day, it doesn't matter. I can just respect that if you're changing your views based on your analysis and you're learning from it, that's the best thing. Doesn't matter if you're right or wrong, just learn from the analysis. And so far, the analysis has been higher and higher and higher and higher and higher prices day after day after day. And finally, we had a reversal day, which we haven't seen since back here in the early part of June. And it's coming up to the peak of our resistance area. So this was our rejection alert area. Reason being, well, you can see the tops here for yourself, some of those swing tops coming up, and we've gone on a pretty solid run. I'm not saying this is going to collapse, but we do need to have some sort of healthy correction. I'm not going to bet against the market saying every day has to be a correction, because that's how you get yourself wrecked, trying to short every time the market goes up when it looks like logically it should be going down. That's how you get wrecked. So we're not going to do that. You're just going to follow the trend, understand that, well, it's maybe coming towards the end, and I'm not going to jump on board just because everyone else is. Remember what we looked at with this? You're seeing a lot of newsletter writers turn quite bullish because the indicators are turning quite bullish because the market is going up, and that's obviously bullish. But like I talked about back here, this tweet, December 2022, this was in yesterday's video, going through each of these opinions that I had, these calls that I had about the market, where it's bottoming. Talked about it at the June low, talked about it at the October low. You guys know that, you've been following me for 12 months. We've been covering this as the bottom of the market. And sure, we're not going to get the exact bottom, but this has been a good range of the low. Now we've broken out of that range. We probably won't come back into this range. Probably won't, okay? I don't expect it to. Anyway, that's what's happening with the S&P 500 before we get on to BTC. The main thing to note here is that this is, people are getting more bullish, therefore we've got to start to expect a bit of a correction. The VIX is also fresh at some fresh lows here, and just the meaning here essentially is we'll probably trade around these levels between the 11s and somewhere up around 20, but anything in this zone 11 to 17 on the reading is a bull market. So that's what I've got these circles for, especially when it first comes into this zone after having a huge spike to the lows, to the highs, which mean lows for the S&P. These spikes, they might seem like they should be very significant lows in the S&P, but they don't have to be. None of these things have to be very low. It could be the S&P going up and then a tiny pullback, and you wouldn't even notice it in a long-term chart of the S&P. One of these sort of lows in the S&P could be one of these. Right? We'll look at that in future videos, but that's what I wanted to update you here, because we are starting to really just hang around at these lower levels, which is part of the bull market, and we will get some corrections. NASDAQ also is smashing past resistance levels. Note, I don't talk about the RSI too much, but here we are at fresh RSI highs. So the relative strength index is really starting to get overbought at this stage. Of course, it can go up much further, but we just don't want to be buying the tops, all right? I talk a lot about buying the bottoms. I'm not going to buy the exact bottom, but I want the zone. That's all my job is as a macro investor and macro trader, to buy around the lows, hang on for the ride, because the ride is crazy. If you haven't noticed already, there's a lot of bears. There's more bears at the beginning. Things get more difficult. A lot of mistakes are made. You get shook out of your positions at the lows. And then the market takes off without you, and you think, damn it, what have I done here? I've thought I would sell on the breakdown because everyone's telling me it's going to collapse. It doesn't collapse. It takes off without you, and now you're out of a position. So that's what I'm trying to avoid here for anyone watching. So NASDAQ above resistance levels, weekly close here above the resistance levels as well. Maybe it just hangs out at these higher prices and then consolidates again before we push higher. I don't know. I'm not trying to say that. What I knew is that we were hanging around lows, and that was probably a good time to be getting into the market. Because even if there is a recession, the market can go higher. Is Germany in a recession right now? I'm sure many of you guys know. I'm not going to hang on to this for too long, but just understand that Germany's entered a recession. It's one of the biggest economies in the world. So I know most of us don't care unless we're in the US, no one really cares. It's just the US and US only. But essentially, I think Germany's in the top 5 in the world. US, China, Germany, Japan, etc. It is now at all-time high prices, all-time high prices, and all-time high close, and it's still in a technical recession. Okay, so forget the recession calls. Oh, it's a looming recession. Recession's coming up. It's going to collapse the market. Well, here's a clear example of what we've just seen over this time. Well, Germany's different. Okay, however many buts you want to throw in there, by all means, do the buts, whatever you want to do with buts. Okay, BTC Dominance. Speaking of buts, BTC Dominance, it is still going up. But what about altcoins? Who cares about altcoins? Most of them are going to die. There will be a few that survive. We know that. But in this case, Bitcoin Dominance, we were waiting on a breakout, waiting. And this thing has taken a phenomenally long time to break out, which at this stage probably means ETH is going to have a bit of a pullback on its ETH BTC pairing, which is right here. And if it doesn't, well, then the altcoins are really going to get absolutely destroyed, because I think this probably has a few legs in it to get up a little bit higher in the percentages here. I'm looking out for around 56%. If I want to use my Bitcoin Dominance without stable coins, if it wants to work. All right, not working at this stage. Nonetheless, we'll get that back up for the next video. But you can see here, we are at 49.6, nearly at 50% for the Bitcoin Dominance. Okay, so this basically just means that it's Bitcoin's turn. The money is flowing back to Bitcoin, regardless of if Bitcoin's going up, down, sideways. People are getting scared of holding altcoins because they're not doing anything. Money flows back into BTC. It's got the breakout. We've had one weekly close above the resistance levels and potentially on our way to a second weekly close. So probably, this trend still has a little bit further to go at this stage after consolidating for many, many weeks, and then the breakout there. So onto BTC. You've hung out a long time here, but basically all the rest of the beginning of that video is to prepare us for Bitcoin, prepare us for cryptocurrency, prepare us as investors for what happens at those lows and how we can avoid the mistakes, because essentially it's the clicking of the buttons. And what makes you click buttons? Well, your mindset, your headspace. And look at what happened. People were clicking the buttons to sell on this day here, on the 14th. Yeah, it was fair enough. We did break some significant lows, and then it just faked the frig out of everything and closed back above those levels for 2 straight days now. I want to see another day, and I want to see a weekly close back above this level, because we have not closed a week under that level, which is a good thing. So the level is the double top at 25.3, and that was dead on the 50% level as well for the March to April range. So that's at March to April range. We'll move this smaller term time frame. There's your 25.3. That is a pretty good bounce so far. Sure, we don't have as much volume, but we've covered before, especially in these grind stages, sometimes the volume can just dry up because no one is selling and the buyers just keep the market climbing up. If that's the case, that is a very strong bull happening, because the supply is diminishing, and eventually if that price doesn't come down, then people start to freak out and think, well, there's not enough on the market, I better buy some now. And then everyone rolls in and we get that move to the upside. You can see it as we started to diminish on some of these levels here. We get the breakdown. Remember, this is over a longer period of time, but this is much, much lower volume during what was a reaccumulation area. Some will argue we had this. Yes, we've got a lot of people that sold out, but then look at what happened to price. It came back into that zone relatively quickly when you remember what happened at that period. You had the first week here, the second week, the third week, and then that was it. For a worldwide pandemic event where the market had to collapse, everything should have been over for a long time. You remember 3 years ago, it should have been over for a long time. That's what we were led to believe. All it took was 3 weeks for the price to come back above the consolidation area. Okay, so the reaccumulation, the consolidation area, which was drying up, this freaked everyone out. They all dumped their BTC, quickly got bought back up, only took 3 weeks, which what many were calling at the time, if you remember, were for decades. This was it. It was over for years. Some of the obviously extremes were calling it for decades. They were wrong very, very badly because obviously we had a very huge run from that point. Now, I'm not saying we're going to get a huge run from that point, but a diminishing volume isn't the worst thing, especially if price is contained in an area, like a pretty tight range. And for Bitcoin, this is a pretty tight range. Top to bottom so far is only 20%, 20.3%. The last move to the downside, we had about 22.6%. So it's slightly larger in the previous move on the massive scare of the banking crisis low. So 2 more days, let's see what happens for BTC right now. It's looking all right. On the daily, we look at a shorter term move. We want to see Bitcoin overcome 26,600. So we finally got the low, 26.6, short term, remember, and then we can start to mount another attack to the upside. They're the levels there that you want to see Bitcoin get back above. That is about 27,400, and it comes in at another 50% level, right? 24,700. Ideally, that's the next level to go. 26.6, mark it on your charts, and then 27.4, and then finally for this bearish move to the downside, which took about 2 months, almost to the day, 27.9. So if you're just waiting on one number, I'll be looking at around 28K, and then these peaks at 28.4. Let's say stick with one number for now, $28,000. That's going to be a good area for Bitcoin to start consolidating above again. And when you look at the price, it's only $1,800 away from that level right now. And what has closed is the Bitcoin futures market. So the futures has closed, nice high close. If you look at the last 5 weeks, really, price has gone nowhere. Absolutely nowhere. If you slept on it for 5 weeks, you have a difference of 0.15%. You had extreme emotion to the upside, extreme emotion to the downside multiple times, yet price has gone nowhere for the last 5 weeks. All right, guys, link at the top of the video description, like and subscribe. That's the update for this week. You know what to do if you want to trade cryptos or learn more about macro cycle analysis. TIA premium link in that video description. Otherwise, have a great weekend. If you're in Bali, have a great time. Maybe I'll see you out and about. Otherwise, I'll see you back here next week for some special videos. I'll be in Jakarta, and you know who lives in Jakarta? Mr. Phil Anderson. So I'm going to go visit him and hopefully do some videos for the channel. Maybe you got some questions, let me know. Comments down below. I will see you back very soon. Have a great weekend. Peace out.